Hello everyone and welcome to my morning report analysis videos on Thursday 21st of June with me, Richard Perry, market analyst at Hantec Markets. It is a day where we are seeing continued dollar strength actually across these Forex majors pairs where the dollar index has broken out above 95.15, which was those October-November highs. And yeah, this is interesting because it continues to gain strength. Now we saw again Jerome Powell from the Fed yesterday reiterating its stance that the case for raising rates continues to be strong. Mario Draghi continues to be dovish. The other central bankers also continue to be dovish as well, and the Treasury yields have sort of ticked higher again. They're sort of picked up back above 2.9%. And it'll be interesting to see how far this this dollar run can go. Because I'm just sort of looking on some of the technical charts, which tend to sort of see that perhaps this dollar bull run is beginning to come a little bit stretched, and perhaps that could start to sort of unwind a touch. Now, what we have got on equity markets is that risk appetite has improved in the last sort of couple of days, following from that sharp shock we saw on Tuesday. But that's not really sort of picked up too much, and the DAX sort of actually down today. We had a profit warning out from Daimler, which cited the trade tariff concerns as the main reason behind that profit warning, and subsequently all the autos in the German index are lower, and that's hitting there. S&P 500 futures had been higher, but they're now dropping back a touch. So yeah, equity markets have not really sort of kicked on in its recovery. The stronger dollar is hitting gold again, and focus will be on oil in the next couple of days. Oil is lower by about 1%, as the expectation is, or the signs are, that Iran could be sort of happy to, or willing, I should say willing, really, willing to accept an increase in production limits, from OPEC. At tomorrow's meeting, so that's going to be the focus tomorrow. But for now, the stronger dollar is still running. But my question is, for how long? So today we've got the Bank of England, and could the Bank of England be a signal that changes emphasis for the dollar? Now, the Bank of England is expected to obviously hold rates as is at 0.5%, and the interesting thing to come out of the Bank of England meeting will be any signalling towards an August rate hike. Now, we've got an expectation of 7-2 on the voting for a hike, and that's expected to be unchanged, but will the Bank of England signal that August is sort of being pulled off the table? If it is, and certainly it seems as though that sterling falling away seems to suggest that August will be pulled off the table. But if it doesn't, then perhaps we could start to see a bit of a rebound rally, a snapback rally. You've also got jobless claims as per normal, around about the 220,000, and the Philly Fed as well, plus 29. So my chart today is Euro Kiwi, because I'm sort of looking at the euro, and I can see that the euro is performing relatively well against the majors, despite the fact that the ECB has been dovish, and Draghi was dovish yesterday. Euro Kiwi has broken out above this resistance at 68.25, 68.40 that we'd been building up last week, but it's broken out on a closing basis now. That neckline breakout has become the basis of support for today's move. Closed above that neckline yesterday, but look at these momentum indicators. MACD lines crossing higher, accelerating. RSI above 50, stochastics accelerating higher. This is all pretty positive stuff for the recovery. Now, that recovery, sort of measure that from sort of 166 figure area, you get around about 240 pips of recovery target. So there is certainly scope for further rebound in this move, and you can certainly see that the market is basically just trading within a range, really, and breaking above that you can continue to play the range, but higher, and certainly with the momentum indicators all pulling positively, the scope for recovery within that range is quite high. And you've got this hourly chart which continues to show a run of higher lows, positive configuration on the RSI, continually finding support around the 45 level, going towards 17, MACD lines above neutral. consistently, you've just got a little bit of a tick lower actually, which could suggest that you could get a better entry level. 68.40, maybe back towards 68 figure. Again, bit of a pivot on the chart. So 68 figure to 68.40, pretty decent buy zone, I think there. Anything above 67.40, I think, keeps the run of higher lows intact. But yeah, nice little buy zone between 68 figure, 68.40. This little cross lower and the stochastics falling away could give you a better entry point at some stage today. But certainly I would say that Euro Kiwi is going higher according to this chart anyway. So I wish you good luck in your trading today, and I will speak to you later.